Yo, what is going on, guys? Welcome back to another video. So as the title of this video says, I'm going to show you how to drastically improve your SMC strategy with the addition of order flow into your system. Now this is a very powerful addition to your trading system. It's a very powerful concept, but a lot of people shy away from it because they think it's very difficult. What someone asked me actually on Instagram is, how can you break this down as if you'd break it down to a child? And that's exactly what I did in under 30 minutes. I'm going to simplify it to its most basic form, take out all of the complex theory and just give it to you in its most basic format possible. Okay, so that's what I've done in this video. Now without further ado, let's get straight into the video. You're going to want to watch this all the way through to the end. The value that's been provided in this video is absolutely insane. So let's get to it. Okay guys, now before we get started, I want you to head down right now into the description and join my free Telegram channel. This is a completely free Telegram channel that I be posting every single thing. When it comes to my setups, when it comes to just teaching you tips and tricks about order flow, etc. And here's the thing, I don't literally have a paid and a free Telegram. I just have to do one Telegram and it's completely for free. So make sure you go ahead and join that now. Now let's get started. So we're going to start off with, before getting into order flow, I want to speak about the issues with smart money concepts. And I wouldn't say it's issues with the concept itself, more so the problems that come with trading this style. Now, one of the first things that you know and everyone knows is the low win rate that it comes with. Now, a lot of people aim for high risk to reward with very low win rates, and this is kind of the strategy. And the problem that it comes with this is it's not realistic. A lot of people forget that it's not like everything that looks good on paper isn't necessarily going to work in reality. So when it comes to having low win rate, right, essentially it means that you're losing more trades. You're losing a lot more trades. You're making very small wins, but those wins, okay, the frequency of those wins are actually very big. Okay, so you might be losing 8 trades and only winning 2 trades, but those 2 trades alone could make up everything from those 8 trades. Now, people forget about pain threshold, and each and every single person has a different pain threshold. Some people can see a lot of reds in MT4 and some people can't handle that much losses. With someone like me, for example, I have a fairly low pain threshold. So regardless of what happens, if I take too many losses in a row, regardless of how big or small those losses are, it still messes with my mindset a little bit. So for me, for example, I find that a strategy that is a much higher win rate, and I don't need those 10 hours, etc. I'm happy with 3 to 1, 4 to 1, 5 to 1. That type of strategy works with me much better. Now, when you have a low pain threshold and you're losing a lot more, it leads into the next problem, which is low confidence. And when you have low confidence in your trades, this is when you start making a lot more mental mistakes. Okay, and with something like the smart money concepts in general, the way everyone is trading it at this point, there's just too much uncertainty. First of all, a lot of people have many different ways of trading it, and people are getting so confused with the amount of information that's out there in regards to it. And even if you have smart money concepts down completely to the T, when it comes to picking which point of interest that's going to work for me, a lot of people get really confused as they don't know what to do. So for example, let's pull it up, and this is where order flow comes in. This is how I came about solving this issue. This is what happens. A lot of people will have this range, right? They'll have something like this, and they'll have multiple points of interest. Now there's this one, which most people, by the way, won't pick because, most people understand the concept of premium and discount, etc. But as we go down, a lot more people are starting to get confused. Do we pick this point of interest? Are we picking this one right here? Are we picking this one right here? And this is the issue. Okay. And what ends up happening a lot of time is people are like, okay, well, I know that my strategy is low win rate. So even if I lose all of these 5 to 6 trades right here, that's completely fine. And this one might eventually be the one to work out, and these all don't work out. Well, they're like, oh, it's okay because eventually the RR on this is like a 10 to 15 R, and it's going to make me a decent amount of money, which, as I said, on paper is fine. But after losing 4 buy setups on GU, a lot of the time we'll get so exhausted and we'll have absolutely zero confidence. We don't actually end up executing this trade. So a lot of the time what will happen is you'll be confident as you're going down, testing all these different points of interest, because you have absolutely no idea if they're going to work or not. You're simply just following essentially what smart money concepts these days has become, is just a pattern. You know, people don't actually look at it from a logical perspective anymore and try to see if price is telling them a story. People are literally looking at it, oh, okay, you have a change of character right here, boom, 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 you see something like this, liquidity grab, let's get in. That's all people see. They just see a pattern. And this is why most people are failing with smart money these days. Now, the way to combat this is, imagine you had something that literally told you, as price taps into my point of interest, are we ready or not? And then if it's ready or not, you execute based off of that. Price then might come down here. Are we ready to move from here or not? Etc, 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 etc. And this is the beautiful thing about it. And this is what order flow allows us to do. Order flow allows us to literally look through the orders. Okay, I'm able to see the orders as they come in to the market, and I'm able to determine, are the buyers here enough in order to push price up or not. Essentially, if we break down the market, and as I said, I'm going to be literally babyfying this as much as possible. I know that's not a word, but I'm going to make this as simple as possible. We're going to forget all about the theory, and I'm going to really lay it down. You know the book, whatever for dummies, coding for dummies, etc. for dummies. This is order flow for dummies. This is simplifying it as much as possible. Okay, so we're going to forget all about the theory. Let's take a look at the market from simple form, buyers and sellers. Let's just say that the most basic understanding of the market is the buyers push price up and the sellers push price down. Now there's a little bit more to it, it's a little bit more in depth, but as I said, we're really breaking it down to its most simplest form. We can check if price is actually going to react from here. We understand that the demand should be stronger than the supply, okay, in order for prices to go up. If price, okay, if there isn't more buyers right here than the sellers, then price is not going to continue up. So essentially, it's all about looking at the buyers and sellers and determining, are the buyers strong enough to react from a point of interest right here or no? Or are the sellers stronger as they come down and the sellers are just going to completely overtake the buyers right here? It's all about validating if my zone is going to hold or not. That's all it is. This is literally order flow in its most simple form, and that's how I mix order flow with SMC. Now, a lot of people are simply just trading SMC on its own, and they're nearly there, okay? And even they might be a little bit more, they might be profitable, but there's another level that you can reach. By adding order flow and SMC, you have the ultimate strategy, because I have up the perfect base strategy, which is the SMC. 80% is all going to be SMC, your market structure, your liquidity, etc, etc, etc. And then you have order flow. Order flow is removing, okay, and it's increasing your win rate, and it's removing all the potential low probability trades, all of those losing trades. This in turn increases your win rate, right? It increases your high probability in the setup, which in turn increases your win rate, which in turn increases your confidence in trading. And overall, your whole trading just goes up to a whole nother level. And this is why I find order flow to be very, very powerful. Now, a lot of people, they simply just take a look at order flow and they don't look at anything else. And this is why I believe that order flow on its own is not a magic tool. It's not the holy grail. It's simply just an extra confirmation. It's an extra add-on to what we do. And this is why it works for me. Okay, this is why order flow works for me and it doesn't work for a lot of other people, because they simply just take a look at the order flow and they think that, oh, just because you can see the strength of the buyers and sellers, well, it doesn't really mean nothing. Like, you need to be able to use this information in an effective way. The information on its own is not going to really help you, you know. So this is why we use order flow when validating these zones. And now we're going to take a look at the order flow and we're going to break it down as simple as possible. Now, guys, you can go ahead right now down to the description down below and you can get access to my free order flow ebook. It's a free ebook about 20-25 pages long, and it will explain a lot of what I'm going to go through in this video. So make sure you go download that. But as you all know, video form is the best way to explain things. So make sure you stick all the way through to the end to understand order flow. As I said, I'm really going to simplify this for you. So make sure you stick all the way through to the end. You're going to be really, really happy that you did. So yeah, let's pull up order flow. Okay, so this right here is the Autoflow Footprint, and let me break down exactly what you see right here. Now, this is not TradingView, this is NinjaTrader, and NinjaTrader, once again, is just basically like another trading terminal. Now, what we do is we have the custom indicator, the FU footprint installed onto NinjaTrader. NinjaTrader will literally just show you the bare candles. It's nothing special. NinjaTrader is not the thing that you're looking at right here. It's the Orderflow footprint, the custom add-on that you add on to NinjaTrader to enable you to see this data. Now, where does this data come from? Well, essentially what we're actually looking at right here is simply just futures. We're taking a look at the GBP futures, the Euro futures, etc. And these are like literally 95% correlated to the currency pair itself. So 6B and GBP USD are like 95% correlated. So whatever you see right here is pretty much the same candles printed onto the trading view chart on the currency pair. Now you might ask, why don't we just look at the order flow of GBPUSD? Well, that's actually not possible, because here's the difference. Futures are actually centralized data. It's centralized data. It's the same everywhere. Whereas when it comes to Forex, there's no centralized data. So you'll have pretty much like a lot of different data depending on the broker, you know, so it's much more difficult to get access to that, whereas the futures is centralized, and this is why we take a look at that. Now let's break down order flow. You see a lot of numbers, right? And it might look very, very confusing, and you're asking yourself, what is going on here? But in fact, it is actually very, very simple. If you have learned Forex and you've gotten this far to the point where you're actually watching order flow videos now, and you understand SMC or whatever strategy that you're currently trading with, and you understand all of that, honestly, this is going to take you much less time to learn. Okay. In fact, I believe that 2 to 4 weeks, you'll have a very, very strong understanding of what order flow actually is. Now, once again, I said I'm going to explain this in its most basic form. I'm going to remove a lot of the jargon. I'm going to remove a lot of the different theory and explain this in its most simple form. You see two areas of importance for us right here. We have this main area where we can look at the candles as they print and numbers on the right and the left. And we also see the statistical panel down here. Let's break the numbers on the candles. Essentially, this is just a candle, right? And it's the open of the candle, the close of the candle, and the wicks, etc. Now, at each and every single price level, you see orders. And these are orders on the buy and the sell side, the bid and ask. Okay, and there's orders that go into the bid, and there's also orders that can go into the offer. And this is essentially what moves the market up and down. Okay, so the orders that go into the bid, the orders that go into the offer, essentially the sellers and the buyers, this is what moves the market up and down. Now, here's the thing. Funnily enough, we are actually not that concerned when it comes to this specific strategy and the way that I look at order flow, because I like to simplify as much as possible. We are actually not interested in the numbers themselves. You know, we actually don't take a look at the number and like, oh, okay, 8, 20, 15, 9, 4, T71. We're actually not interested in that at all. And I can even tell you and break it down even more when it comes to the theory and how these orders are put through and how you read the footprint chart diagonally, etc., etc. I could do that, but that's actually not needed, because this is a very, very simplified version of order flow. And when it comes to how we analyze order flow, we don't actually look at that at all. Now, anything that we look at is actually already color coded, or it's marked out by some sort of rectangle, box, whatever. And we're going to go through the first one. Now, as I said, on this side right here, it's the offers. So anyone that buys into the offer is essentially pushing price up, and anyone that's selling into the bid, these are aggressive traders. Okay, an aggressive trader, all an aggressive trader is someone that market executed. So if I want to sell GBPUSD, I'm hitting the bid, and if I want to buy GBPUSD, I'm literally hitting the offer. Okay, so essentially what you see here is the people that have bought and the people that have sold. Now, these are all the executed contracts. Now, there's a bit more of a better understanding of this. You can go even a bit deeper into this by taking a look at these colored numbers. What are these colored numbers? These are literally buying and selling imbalances. It is showing me price levels where the buyers are a certain amount larger than the sellers. So here we have it's 400% larger, so 4 times larger than the sellers, or the sellers are 400 times larger than the buyers. So we take a look at it diagonally, we can just see here 23 is way more, like more than 4 times larger than 2. 10 is more than 4 times larger than 1. When you're taking a look at it, you're just reading diagonally, reading diagonally, reading diagonally, reading diagonally, reading diagonally, reading diagonally. Okay, we're not actually reading it diagonally though when it comes to it. We literally just look at the candle and we're like, okay, 4 buying imbalances. So clearly the sellers here are very, very aggressive, and there's a lot more buying right here within this candle. So this is a good sign for the buyers. Similarly, when we're taking a look at these selling candles, okay, we can see that, oh, okay, we have a very large number of selling imbalances, more selling imbalances, more selling imbalances. This is a good sign for the sellers stepping in. Okay, we have other things, for example, like exhaustion. This essentially shows you that right at the top on the offer, okay, when it came to the selling candles, when it came to the bearish candles, there was literally only one buyer right at the top. So there was no interest in like taking this candle any higher. There was literally just one participant in the market at this point, one candle, only five executed contracts right here, etc. So as you go along, this shows you exhaustion in the market, and you don't have to do anything special. It's literally marked out for you in the green box and in the red box. Even if you said right now, I have absolutely zero interest in the theory, you don't have to know anything about the theory. Understand that this is an exhaustion, and it's a good sign for the candle to continue higher. And this is an exhaustion, the green ones, and it's a good chance for these sellers to continue lower. Okay. And then the last thing that we take a look at is these, the COT. And this essentially, all it shows me is the commitment of traders. What does the commitment of traders essentially mean? Simplest term is POC. For anyone that has anything to do with volume, it's the POC. It is the most contracts traded within that candle. This is where the most volume in that candle has been traded. So pretty much, if we take a look at this candle, right? We take a look at this candle, most of the trading occurred right here. Most of the buying and selling was occurring right here. Most of the buying and selling was occurring right here. Most of the buying and selling was occurring right here. Now, when it comes to all of these different things, I teach you a specific strategy, right? I teach you how to look at order flow in my own way. And I might tell you that imbalances are important for me, looking at the statistical panels are important for me, etc., etc. But I might say the POCs are really not that useful for me. I don't really use it. But someone else might come along and they might say, okay, well, the imbalances actually don't really matter to me that much because my strategy looks at things a little bit differently. But the POCs are very, very important. Okay, so I actually give you the way that I also do it. I don't just throw all the information at you. I also give you my method. But if you choose to add something on your own, if you choose to tweak something, that's also totally okay. It also works. That's the beautiful thing. This is not like you're learning a method of analysis right here. Okay, you're not just learning like just the strategy. You're actually learning a method of analysis, an X-ray. I call it the X-ray method of analysis because you are literally looking through the candles. Okay. So that is pretty much all it comes. Like you're pretty much now an expert at understanding what is going on right here when it comes to the candles. Okay. Now we have the delta statistical panel. What is the delta statistical panel? Once again, it's very, very simple. And you have essentially two colors, green and red. The red is going to signify essentially sellers. We're going to break it down like that. And the green is for the buyers. Okay. And the delta right here. Let's break each and every one down. We have the delta, which essentially is the net difference between the buyers and the sellers. Okay, so let's take a step back now and understand the net difference between the buyers and the sellers. And now we have the volume right down here. So most people, right, they take a look at the volume, and the volume itself is decent information, but it doesn't really help me that much because I like to use this analogy of a war. Think of two armies, right? And think one army has 10,000 people, 10,000 soldiers, and the other army has the same amount, 10,000. Think of the war. It's a very big war, and when these two sides clash, it's a very, very big war, but the outcome is very undecided because we don't know. They're both equal numbers. So one side could potentially beat the other by a little bit. It could be a stalemate, or the other side could beat them by a little bit. Now let's look at a even smaller war where there's only 1,000 on one side and like 200 on the other side. Now the bigger army, which is the 1,000, is going to completely demolish the 200 soldier army. Now, when you look at the volume of the first battle, which is 20,000 people, and the volume of the second battle was only 1.2k soldiers, one's clearly much larger, okay, the larger battle. But the outcome of the second war, okay, the outcome of the second war is much, much clearer because one side completely destroys the other side. So in essence, you could have an intense amount of volume within a candle, but the candle might not go anywhere. Whereas if you have the sellers stronger than the buyers, like a lot more stronger than the buyers, or the buyers a lot more stronger than the sellers in one candle, then you'll have a much, much more clear outcome within the candle. So you can think of it this way. Whatever occurs in the delta, this is like the statistic of that candle. So whatever occurs in this delta right here, essentially is going to print out in this candle right here, and the statistics of this candle right here is going to print out right here. So you're taking a look at them directly across from each other. Okay, now the delta is essentially the net delta of the of that candle. You have the max delta, which is the maximum delta of that candle. Okay, the max amount of positive delta in that candle, and then the min delta is the minimum delta of that candle. The cumulative delta is essentially just the cumulative delta of the whole day. We don't really look at that. The main things that we look at are these top three. Okay, what we essentially want to see is as price continues up and as it moves up and the candles are green, the candles are bullish, we want to see positive delta. Okay, whereas when the market is shifting lower, we want to see the candles printing negative delta. Now, not only do we take a look at the color of the delta, whether it's bullish or bearish, we can also take a look at the strength of the delta. So the strength of the delta will actually give you a lot of information and detail as well. Now, if we take a look at this example right here, where you see the delta, okay, let's take a look at the net delta, and we can see as we move along, we have a candle of 155 delta, 158, then we see this green candle. It's a positive candle, right? It's a bullish candle, but the delta is minus 46. The next candle is minus 29. What is this showing me? It's showing me clearly that we went from having some very, very strong buyers as we set the high. Now we're getting some selling stepping into the market. Most likely the market should probably start falling from here. And as you can see, we start getting that pullback. And then look, as we continue down, we now start getting some signs of positive deltas coming in. Okay, some strong positive candles as they step in. And now we potentially could start seeing a reversal occur in the market. Okay, we start to see a lot more positive delta. Even though these candles are bearish, we're starting to see some positive delta. So clearly, these buyers are stepping in right here, and they're stepping in very, very strong. And we went from having, you know, negative deltas of 157, minus 122, minus 24, minus 177, minus 162. And now we're flipping and we're switching to look at the maximum delta, which is the buyers. 302, 223, 134, some strong buying. And look what this leads to. Now the market has set that low and now it's reversing in the opposite direction. So this is very, very powerful. So now you might ask me, how do we mix this in with smart money concepts? So now let's imagine that we have an order block to the left. Okay, order block, institutional candle, whatever you want to call it, I don't really care. But let's imagine we have a point of interest to the left. Now, as price steps in and taps into my point of interest, right, I'm able to validate if price is going to react from my zone or not, because I can see as we're stepping in, the sellers are coming in, the sellers are coming in, the sellers are coming in. But as we get closer to the point of interest, the sellers are dropping off and the buyers are stepping in. So that's what you want to see. As you get closer to your point of interest, you want to see the sellers get weaker while the buyers get stronger. And that's exactly what we see right here. The buyers were weak as we were stepping down, but as we got closer and closer, now the buyers, look, got stronger. As we tapped in, they got stronger. In fact, when we just tapped in, look at the surge of orders that stepped in right here. Okay, and the same thing right here, the sellers are slowly getting weaker and weaker and weaker as we get closer to our point of interest. So that's what you want to see. And that is pretty much it. Like, this is how we break down if an order block is going to get validated or not. So every single time, okay, so every single time we approach one of these point of interest, I pull up the order flow and I check, okay, are the sellers getting weaker as we come along, and are the buyers getting stronger? Do we get a surge of passive buyers stepping in from this candle? Okay, is this demand being respected or not? And you can keep doing that. So now, instead of just randomly entering the setup, you're actually able to validate if your point of interest is going to work or not by looking at the order flow. And this is extremely powerful. And this is not something that I need to convince you on, because now it's up to you. You either say, yeah, okay, this makes sense, and this is something that I want to be able to do. And at the end of the day, we're all smart enough to know what something like this could do for us and can do for our strategy. So it doesn't really require me to convince you of, you know, the power of this. Now, right now, you might thought, like, at this point in the video, you know, this is all giving you a little bit of information. Now I'm giving you a sales pitch on how to learn more about order flow. Well, that's not the case. You know, I've actually already prepared a free order flow beginners course even before this video, and that's on my channel. You can go ahead, the link is down in the description, watch the order flow beginners course. It's 6 videos long, and it goes in a little bit more detail into everything that I've just explained to you in this simplified guide. So this is the simplified guide, and now in that video you're going to be able to get a lot more detail into everything that I've taught you on order flow, and by the end of that series you should pretty much 90% master order flow. The rest of it, I'd be hosting sessions on order flow, live trading sessions in fact, pretty much nearly every single day on the Telegram channel. So make sure you go ahead and join that. And guys, do me a favor, drop a like on this video, subscribe, comment down below, let me know if you like these simplified guides that I'm creating, and make sure you go ahead and follow my Instagram down below. I do a lot of giveaways sometimes, and you know, I give away funded accounts, free order flow softwares, etc. So make sure you go ahead right now and follow my Instagram. And with that being said, this concludes the simplified guide on order flow. I hope you guys enjoyed this, and I'll catch you guys on the next lesson. Have a great day.